Well, Discovery's percentage of earnings from global operations is minuscule. It's something like 2%, but it's a rapidly growing part of the Discovery business. Your first global foray really was Destiny Health. I mean, you got a blood nose, but you must have learned some pretty valuable lessons in that time in the United States.
And we learned a huge amount. I mean, intellectually it was a failure, but in my own emotional kind of journey, it was an amazing. The madness of it. We were a startup ourselves here in South Africa. We probably had 200,000 customers, and we started up a health insurer in America. I mean, it is madness. And we actually got quite far. We had like 60 to 80,000 members. We're moving towards profitability. The issue was that we couldn't get the discounts. We were just too small. And the environment had changed, to be fair to us. So we did pull out, and we tried a few years, and it cost us money. We never bet the house on it, so it actually didn't create any real. But the learnings in that were tremendous. I mean, I actually think you learn more from success and failure, but we wouldn't be here today without that foray. I think it created a global mindset. I think it exposed us to a network and to understanding what it takes to move and shake globally. So it was I think a difficult time, but it was actually hugely seminal in the evolution of our business.
But the decision to leave a vitality business in the United States is what has been the catalyst then for adding vitality not only to other US health insurers, but to markets around the world. I mean, massively diverse. How many are there? 15 by now? More?
Yeah, there are 90. There'll be 19 markets, and it's growing at a very strong rate. We thought in America the idea of medical savings accounts would be powerful in health insurance per se. But when we left, we realized the power of this incentive model. It started out here it's just an idea, but we kind of realized the power of this behavioral economics and loss aversion and, just the power of this in the insurance markets. Let's leave it there and try and grow it in the corporate space. But what happened to us, I think, is the power of vitality in dynamically pricing insurance and financial services, and the profound nature of that became clear that thing could be globalized. And I mean, the real beta site for that was the work done with AIA.
Who's the AIA?
AIA is the big Pan-Asian insurer. It was part of AIG, and when the US government took it over, they basically sold off AIA, which was a massive franchise, listed separately to recover some of their money. AIA today is, I think it's $100 billion business. It's one of the really great insurers. But the then CEO, Mark Tucker, and I worked together with Pru, who was CEO of the Pru, sat down and said, could we build this vitality into AIA? Could it work? And we started. It was a very difficult process. I mean, not simple. It's a very physical product. It's actually really complex to build into insurance. And so we started out in Singapore, and we moved it. Took us a few years to get going. But as it started to move, the model became repeatable, and scalable. So, moving to John Hancock in America, merging it with a vitality chassis we had in America, generally in Europe, and now we're doing it all over the place. It's hugely powerful. And then the UK itself, which is our own insurance business, in fact, that's now 15% of our earnings, I would guess, that has a vitality chassis that is really powerful. So the whole vision here is we're building a platform that I think is globally biggest today around behavior change for financial services. So health insurance, life insurance, motor insurance is the same kind of thing. So it's a very, very repeatable model.
Tell me about Ping An. Koos Becker famously was about to pull out of China. They had spent billions on acquisitions in China. They were about to throw in the towel. Pony Ma, I sort of have this image of Pony Ma walking into the Naspers offices with cardboard boxes everywhere saying, I've got this little thing called 10 cent. I'll give you 46% of it if you give me $200 million. And they went, in for a penny, in for a pound. We've lost so much. Let's give them some extra money. And that stake, of course, is worth over R1 trillion today. And then you've got a 25% stake in Ping An Health, the health division of the world's biggest insurance company in China, Ping An. Is Ping An Health your 10 cent? Is it Discovery's 10 cent?
I'm scared of the analogy because Ping An itself is the most powerful insurer in the world today. They don't need, to an extent, us from a scale perspective, but its potential is remarkable. I mean, we started out with a 20% stake. We had a call option for a further 5%. We acquired that 5%. It wasn't easy going initially. I mean, we kind of came in with them. It was a very embryonic health insurer in a market that didn't understand health insurance. They were selling like gift cards, for health, in other words, which is done there. In other words, you get a checkup and that kind of stuff. It's moved quite quickly to a proper specialist health insurer. The growth rates are absolutely staggering off the charts. We are shifting as much IP as we can across to Ping An and to Ping An Health. And the partnership, I think, is very good. So, its growth is tremendous. The profitability, I think, will emerge. The dynamics are excellent. Claims levels, loss ratios, lapse rates. But we've tried our best not to create an expectation. I mean, it's so easy to draw a parallel to Tencent. I think those are different industry, different times. But I do think it has the potential to be bigger than we are. It really does. I mean, this is a business that is doing, I don't know, 20, 30,000 cases a day of new business. We've never seen that kind of stuff. But I think we've got to be a bit careful about.
Do you have to hold yourself back? Do you have to contain your own enthusiasm sometimes for the potential that exists?
I think we are very, so when I say short-term focused, I think we're not extrapolating those volumes. I think we're trying our best to understand in the short term what are the quality measures. I think Ping An as well. It's a new market. It's a nascent market. Health insurance in China is going to just do this. I mean, it's an unpenetrated market. And Ping An, a million agents, I think 1.5 million agents across the country. It's of considerable power. So it does have incredible potential. We're seeing really good, not green shoots, we're seeing tremendous growth rates. But I think we focused on our quality, technology, how we can shift as much IP across. And in fact, the other way around, Ping An is one of the most powerful technology companies today. So we're using some of their technology in the bank is coming out of Ping An. So we're using some of their stuff this way. There's more stuff I think we can do in Vitality with them globally. So it's a great relationship. We're a very small partner of a very, very powerful group. And I'm very proud of the relationship. It's a very good one.
Adrian Gore, Chief Executive of Discovery. Thank you very much indeed. That is Taking Stock for this evening. Thank you very much for watching here on ENCA. Adrian Gore, Chief Executive of Discovery. Good night.